And welcome. You're watching NDTV Profit, and over the next half an hour, we will talk about everything that's exciting in the mutual fund universe. Of course, the market's having a quiet afternoon. It's not looking too great for the street. The breadth is also fairly weak. But let's go into some more interesting stuff, which is what you should be doing with your money and your portfolio. These are tough times to navigate. And with all that talk about global markets outperforming India, the question to ask is, should you be adding allocations to other geographies? Rishabh Desai, founder, Rupee, with Rishabh and Nisreen Mamaji, founder and CEO of MoneyWorks, both join in. Thank you very much for joining us, both of you. Nisreen, what are your thoughts, right? I mean, all of us who live in India have a home bias. And for obvious reasons, any investor is and has a home bias because this is the only market we truly know. In your opinion, how important is it to diversify your portfolio across geographies?
So, as you rightly said, there is a home bias, but it's very important not only to have the geographical diversification, but also certain industries, are not represented in India as yet, or, we are not completely, in the space, like say for digital especially. I'd like to draw an example. Investors can now invest in, certain international funds. I'm talking about the Nippon India Taiwan Fund, the Nippon India Japan Fund, the Hang Seng Fund, which had closed down subscriptions, until October 15th, 2024. On Feb 2nd, 2022, we were not taking any more subscriptions via lump sums, switch-ins, SIPs or STPs into these funds. But typically, I'd like to draw your attention to the Nippon India Taiwan Fund. It's an active equity fund, and it enables investors to diversify into select Taiwan-based stocks, such as the semiconductor giant Taiwan Semiconductor Manufacturing Company, which has the highest weightage of 8.2% in the fund. The top three stocks are, in the technology space with a combined weightage of about 20.35%, which are Taiwan Semiconductor Manufacturing, Asia Vital Components, and Gentech Precision.
Nisreen, we'll talk about the funds in a minute. I just want to help our viewers understand the importance of this, right? Products apart, I think at a portfolio level, we need to get a better understanding. Rishabh, I'm going to come back to you for this. Nisreen, in your opinion, what is the ideal allocation to global funds one should be looking at a portfolio level?
So I think we shouldn't go beyond, 10 to 15% in the portfolio, as you mentioned, for an average, risk taker, because, Rishabh has already mentioned some of the points. But having said that, if you have certain goals of, say, sending your child for a foreign education and you want to lock in the dollar at the current rates, so in those cases, definitely we do suggest a higher allocation because, in say 10 to 15 years down the line, you are planning to send your child to university, perhaps in North America or in Europe. So, if you have a specific goal in mind and you have, say, 30% of your portfolio or your SIPs working towards that goal, then yes, definitely it makes sense to have higher allocations. So on a case-to-case basis, the decision would be obviously different. But by and large, I think don't go beyond 10 to 15% of your portfolio for an average risk taker in any equity, in any international fund, whether it's Asia or the US.
Nisreen, you want to have a go at this? There are a few active funds that have now, of course, started taking allocations. In your opinion, what is the best way to play a global allocation? Do you do it through passive ETFs, invest them in a staggered manner, be disciplined about it? Or would you go and invest into active funds playing these specific geographies?
See, a lot of these funds are also, fund of funds, which are feeding into the international funds. So what is available in India today, you can have the ETF options, or you can go in for a fund of funds, which is particularly, investing in an ETF or an index. So that would make a lot of sense. I think for, Indian investor, as rightly mentioned earlier by Rishabh also, a disciplined fashion to go in with an SIP would be a very good way to go about it. But, don't allocate too much on the international funds. Because, we do have a lot of investors, in fact, NRI investors investing into the Indian markets and also, undertaking the currency risk. Even after subtracting that, you still will make a lot of money in India. So, 80 to 85% of the portfolio should have a home bias. 10 to 15% you can invest into an index fund or a FOF rather than buying direct equity and going through the LRS route, etc. A mutual fund is a completely holistic, product that can give you a lot of ease and convenience of investing in the international markets. through, an index fund or a fund of funds. I mean, and also select a FOF, which is available over here, which is a feeder fund into any of the international markets, whether it is in Asia or the US.
Now, Rishabh has already mentioned how he prefers the US equity as opposed to any of the other emerging market or Asian markets. Nisreen, what are your thoughts? Are you recommending to your clients to add a little bit to the Japan, Chinese, or the Taiwanese market? And the reason I ask this because while it may not be strategic, a tactical allocation could be warranted, you think?
Definitely. Like I said earlier, there is particularly there's a Nippon India Taiwan fund, which, doesn't, these sort of industries are not very well developed in our country, like the semiconductor, space, as well as I said earlier, the Asia vital components, this precision industrial. So, 3 of these companies are about 20.35% of the fund. So if we are anyway looking at, this particular sector doing very well internationally as well as within our country, and we don't have exposure to these particular industries within our country, then we should be looking at it. We also have the Nippon India Japan Fund, which has an equity fund, which is an actively managed fund. It has the top Japanese companies like, Daikin, Hitachi, and Tokyo Electron. So unlike its tech-heavy Taiwanese counterpart, which is the Taiwan Fund, the Japan Equity Fund is tilted more towards, consumer cyclical. So you're getting a very different flavor with the Japan Fund. Earlier in the month, mutual fund investors were lured into the China-based mutual funds as well, following the nation's largest economic measures. So investors can now look into the Nippon India, Japan, or the Taiwan Fund, as well as other Asian equities. We also have the Hang Seng Bees Fund of Nippon, which is an ETF. And basically, it also corresponds to the total returns of the securities as represented by the Hang Seng Index. So these are a few of the funds that, we should be looking at. We also have the Nippon India US Equity Opportunities Fund. And this will provide you long-term capital appreciation by primarily investing in equity and equity-related securities of companies which are listed on the recognized stock exchanges in the US. And the secondary objective is to generate consistent returns by investing debt and money market within the country itself, that is within India. So you're getting, exposure to 4 or 5 different geographies and certain industries which are not yet developed in our country. So definitely for diversification purposes, you can look at any of these actively managed funds.
And Nisreen, in fact, just to quickly make a note, the Edelweiss Greater China Equity Fund has also done pretty well in terms of returns. The 1 month return is 3%, or 3 months it's done 14%, and 1 year it's upward of 20%. So it's actually had a good run, stable in that sense in the last 1 year. Nisreen, very simple question. If you want to take advantage of a currency, which is our local currency, depreciating, would investing in a fund of fund with a global allocation be a good idea? Could that help you make money when the local currency is declining against the dollar, say?
So definitely, I mean, you have to hedge the currency at every point of time. So you should be investing in the US dollars. You can also look at a multi-currency, multi-asset fund, which is an alternative. It would include gold as well as some amount of international equity. So I think that would be a very beautiful product to enter into. It has equity. It would have fixed income. It would have gold as well as international equity. So that is a product that you can use for your hedging purposes, because obviously you're also looking at the rupee depreciating at any point of time and also earning through the currency appreciation in any dollar fund that you would have. So rather than taking an individual bet, because it's really difficult for a retail investor to do that, I think we can leave it to the fund manager by investing in a multi-asset fund and having exposure to these various equity and debt classes, as well as which includes international equity. And I think the retail investor should have a longer term holding view, not a tactical view just for 2-3 months, because some of the funds we've discussed have shorter term very good returns. But in the last 3 years, they've been languishing, especially the China funds. So, if you are a long-term investor, you have a longer-term view, then definitely, you should be investing in a product which has various asset classes, and don't take a view for a particular asset class, like, only an international equity or only betting on the US dollar. So keep in mind all these factors, especially because, your risk-taking ability would be average.
Great talking to you. Thank you for building that perspective. The best way to do this is, yes, you need geographical allocation, but you don't need to go overboard. The easier, cost-effective strategy to adopt is to do it through passive investing. US is a preferred market because there's transparency. Markets like China, it's very tough to know what's going on. The bias should remain to Indian markets, and funds like Parag Parikh, which do make that allocation to global equities, have been phenomenal performers. So you may not even need a fund of fund. A Parag Parikh in its own worth can actually play a good role for your portfolio. With that, we're completely out of time. Thank you for watching. There's a lot more programming on the other side, so keep it with us.